Hello, welcome to the European Open briefing for Wednesday, May 31st. I'm Rafi Boyajian, currency analyst at xm.com, and we're going to be having a look at what's happening in the currency markets today. So today's worst performer against the dollar, at least, is the UK pound. It fell after a new poll came out showing that the Conservatives may in fact lose their majority in Parliament. So we're seeing the pound test the 1.28 level again against the US dollar. It briefly fell below it several times before bouncing higher again. The dollar, on the other hand, is a little bit firmer this morning. We had some good data out of the US yesterday, so it's that's supporting it against the yen. We also had better than expected PMI numbers out of China this morning, and that partly helped the yuan hit a 4-month high, although the yuan is mostly influenced by interventions by the People's Bank of China. Despite the good numbers out of China, though, the Australian dollar is struggling this morning due to another drop in iron ore prices. But let's start with the pound now, because the pound, we can see, has been moving up and down around the 1.28 level for much of this week. We had a new poll from YouGov yesterday. This was a slightly different poll in the sense that the poll actually looked at individual constituencies in the UK, and it looked at how voters within each constituency would vote, and that was different from other polls where they just ask people to say who are they going to vote for, and this shows that using that model, the Conservatives would in fact may lose up to 20 of their seats, and Labour would gain 30 seats. And this is rather alarming, because if this poll is accurate, then the Conservatives may lose their majority, and the UK might end up having a hung parliament on June the 8th. So that's why we're seeing the pound, that big drop here in the chart late yesterday. So that's why it fell rather sharply. It had actually bounced higher in the European session yesterday, going up as high as close to the 1.29 level, but now it's currently trading around 1.2811 level. There was some support from better than expected consumer confidence survey data from GfK. Moving on to China now, because we did have well, there wasn't actually anything too exciting, but there was nevertheless better than expected. The manufacturing PMI was unchanged at 51.2 in May, but this was above expectations that it would drop to 51.0. Plus, it shows that the manufacturing sector in China has been growing, has been in positive territory for almost a year now. The services PMI also strengthened. It rose from 54 to 54.5. Although this doesn't directly affect the yuan, it is worth looking at the yuan today, because it has actually been strengthening in recent days due to intervention by the People's Bank of China. The yuan is currently at just below 66.82 per dollar. And this is because the People's Bank of China, China's central bank, has signaled that it is becoming less tolerant to weaker yuan, and although it had been rather steady over the past few months, now we're showing a change of tact by the PBOC, and it'll be interesting to see whether or not it's going to strengthen further. Also, last week the People's Bank of China said that it is reviewing how it calculates the midpoint. So if they go ahead and change how that calculation, we might see further appreciation of the yuan. But let's move on to the Aussie and the Kiwi now, because the Aussie usually does rise from positive Chinese data, and we saw that just very briefly. It hit near 1 week high of 0.7475 before falling back again. It's currently trading around the 0.7450 level. We also had private sector credit data out of Australia as well, which came in within expectations, and it was fairly good, showing credit credit expansion in April, but nevertheless we saw the Aussie slip, and this is mainly due to a 4% drop in iron ore prices today, according to the iron ore futures. And it is a bit strange that iron ore prices fell. They were actually slightly up early in the week. And looks like we also had Chinese steel PMI numbers that also did little to support iron ore prices. But the New Zealand dollar though is doing better. It's actually at a 3 months high of 0.7108, currently trading just below that high. We're seeing the New Zealand's economic outlook getting more and more positive. The NBNZ Business Outlook Index rose in May. We also had the RBNZ's biannual financial stability report, which showed that domestic and global risks have lessened in recent months. Let's move on to the US dollar now, because against the yen, the dollar, we can see it has been on a steady downtrend this week, but it's not. It's currently trading at just below the 111 level. It did recover from yesterday's lows, but it is off its highs as well. We had personal consumption income data out yesterday, which showed both rose by 0.4% month on month in April, as expected, easing concerns that the US economy is slowing further in the second quarter. We also had the core PCE price index, that's the Fed's preferred measure of inflation. It rose by 0.2% instead of 0.1% as expected, although the annual rate eased to 1.5%. That's the slowest since December 2015. Although most analysts expect the annual rate to that 1.5%, that's as low as it's going to get, and it should head higher in the coming months. We also had Fed Governor Lyle Brainerd speaking yesterday. She pretty much reinforced expectations of another rate hike in June, although she was rather cautious, saying that she is concerned about the lack of progress in getting inflation to back up to 2%. The yen saw little reaction from good data out of Japan. The industrial production in Japan rose at the highest rate since 2008. In April, it was up 4% year on year, although this was slightly below expectations of 4.3%, but nevertheless it shows that the Japanese economy continues to grow at a solid rate, which has been much of the trend in 2017. And before we go, let's have a very quick look at the euro, because yesterday we saw the euro rebounding from its lows following Draghi's dovish comments. We had some reports that suggest that the ECB will be discussing at the June 8 meeting on removing the easing bias, although this falls far short of discussing withdrawing the stimulus program. It does nevertheless signal a shift in the ECB's direction. So I mean, that was pretty much what most analysts are expecting anyhow, but it nevertheless helped the euro go briefly back above the 1.12 level against the dollar. It's currently trading around 1.1180. There was little reaction to an unexpected drop in German retail sales in April. The main focus will be the flash inflation numbers for May for the Eurozone coming up later in the day. And looking at today's economic calendar, we can see the data out already. German unemployment numbers were also out a short while ago. They fell more than expected to 5.7% in May. We've got the flash Eurozone inflation numbers coming up shortly, as well as the Canadian GDP numbers in the US session, the quarterly GDP numbers, and the Chicago PMI in the US as well. And in terms of speakers, we're going to have the Dallas Fed President Robert Kaplan due to speak at 12 GMT. That's it from me. Thank you very much for watching, and have a great day.